Good morning. It's Harvey Jackson. Just going to go through some of the news items. Just want to point out that we're having a marketing meeting in Moosomin on the 26th and in Stenen at Rawhides on the 27th. So you can see, I think everybody got an email. So if you wanted to, respond to Carter, that would be appreciated. Or you can just, let me know, and I will send out a text as a reminder as well, and maybe a calendar invite as well. So here's your Stenen on the 27th, and on the 26th, it's at the Legion Hall at Moosomin. Palm oil has been rising after a pretty steep fall, and rumor is that there's some uh, uh, issues with production in both the Malaysia and in Indonesia. Uh, and here you can see it in here as well. Just wanted to point out, and this is always something that I need to remind myself as well, but if you look at what makes up the world vegetable oil market in a percent, and you've got 40, and if you add the palm kernel oil in here, you got 45% of the oil that's used in or produced in the world is palm oil, and then you got just around 30% is soybean oil, and only 11% is rapeseed, and then you got your sunflower and all the other oils makes up a bigger or a percent there as well. But just knowing that we're growing this, and this is our influencers, right? Our bigger influencers, we can be replaced by those products, right? So it's just a thing to keep in mind. Here's your palm oil price and how it's actually failed. Still, this 5,000 ringgit is actually a very important place to consider when we look back on timelines. Uh, Here's your an article just talking about how the Canadian dollar actually has an impact on inflation as well. So a decreasing Canadian dollar has an inflationary risk as well, and we all feel it. That's for sure. Wheat, big fall, but a lot of it is influenced by the U.S. dollar strength and how that actually is a bit of a punishment on these U.S. traded commodities. Here's your Canadian dollar. I keep on having to move this line down to show this move, but that was kind of like a spot where you would say you could draw a line in the sand. It's not going to get lower than that. But when you look at it in a longer term picture, and this is going back into the Trump trade or Trump era, and we traded very choppy and lower than these values that we currently have as well. So the possibility is that we could actually punch through these values, but you can see the general trade actually traded, in a higher range than where it is currently. And here we are again. Just you got your Trump trade in the middle here, but just hey, going back to the 80s even and seeing how this has fluctuated. Here's your canola oil. Broke through my trend line yesterday and trading green today, but your 200-day moving average is actually supportive. It punched through it yesterday and now trading back at it. So let's hope that that can hold. Here's a last year or next year's new crop targets. I still would say if we haven't made sales there, try to get something kind of booked for that first increment of sales for new crop at the values when we get into let's call it 665 or 655 to 660 ranges. Rapeseed, still very well supported. Didn't punch through a line unless I were to draw a line there, and I'm not going to do that. But $535 rapeseed in euros, still quite strong when you look at where this trend came from. And how does that relate to in Canadian dollars over the Canadian canola price? It's $154, or almost tried to touch the 160. Pretty amazing move. Soybean oil still trading in the range. 200-day moving average is supporting here. Like to get back up into this higher end of this range, and but it's green today, so that's a good thing. Here's your soybeans and its trend. It's not friendly, and those two are definitely conflicting each other, the soybean and the soybean oil. Crude oil, pretty big move down, but you can see that there's a consolidation possibly here, but we're below that $70 mark, which is not too bad for the world economy as far as that price. Wheat, this has been a long and kind of a hurtful kind of a area here. Red, red, red every day. We got a little bit of a green on the screen right now, but we'll have to see how that actually turns out. But we're definitely getting close to this previous uh, uh, low that we made back in August, and it's pretty choppy going down. So if we look at this at a longer term, and I have this, as a resistance line that we had to get above. And if we look back at previous times there, when did we break through in the October kind of August, September timeline? It took, let's call it 3.5 years here. And if we look at the previous time to before it broke through that uh, trend line, it took 3.5 years. And if we go back to looking at our slide, we're only 2.5 years. So I'm not saying that that's going to happen, but we need something to change. So here's your Chicago wheat, uh, uh, down for quite a few days, getting very close to this previous low made back in August. And your Kansas wheat, the same scenario. Here's your milling wheat, uh, same scenario again, but August lows, getting close to it. Actually, trading at the 61.8 on the downward move in the short term. Next report that's really significant is December 5th, and then December 10th for the USDA. So this is the StatsCan, and this is a USDA. So we've got a couple of reports before we get to Christmas. And yeah, one thing I do want to note that on the chem side, there I'm going to be passing along the names to Dean York and Jackie, and they might be reaching out to see if you've got any needs for chemical for this upcoming season. And thank you very much. We'll chat later.